So today we're going to do a bit of a response video because one of my favourite YouTubers out there, Daniel at Unrivaled Investing, actually posted a video about hims and hers. And he actually posted a video being a bit negative on it, basically saying to avoid it. And I was quite surprised by that because I obviously own the stock and I believe the stock is going to do, well, it's done already done very well, but I think it will do even better in the future. So I was quite surprised to see him put that video out, and I wanted to give a alternative view to it because obviously if someone is posting something about your business, it's good to hear a mixed opinion out there. But when you hear a mixed opinion about it, if you see some negative points out there, if you can't answer them negative points and say, actually, I believe you're wrong on this, then obviously maybe them points are something that you need to take into consideration, and maybe you need to reassess the stock. So with an investor that was talking about a stock I own and I think very highly of, Daniel, I wanted to have a look and go, okay, these are the things that he thinks why it's a reason to avoid hims and hers. Can I counter those arguments? And I thought it would be a really good video to do. Now, funny enough, we actually did this about 5 months ago. Daniel actually put a video about 5 months ago talking about hims and hers, and he said that he was avoiding the stock 5 months ago, and I actually posted a response to that video, which was this one here, and saying, look, I think it will do very well. And obviously the stock has performed absolutely amazing since that time frame. The stock is up over 107%. So he's recently done this one about 3 days ago, and I thought, okay, let's do it part 2, my response to it from just like how we did 5 months ago as well. So we'll go through it today. And by the way, I've put on a smaller camera video, obviously of me, as you can see right now in the corner of the video. I've not done it for a while because I thought it didn't look great, but I thought I'll add it in today. I don't know if it's something that you want to see return or if it looks better without the video of me there in the corner. Let me know in the comment section. But yeah, let's get on to this and some of the points on why Daniel thinks hims and hers is maybe a stock to avoid, really. So first of all, he starts the video by saying that he actually made a lot of money by buying the warrants when it was a SPAC. Although he did not mention that he made a video 5 months ago saying that it was an avoid of hims and hers, and the stock went up 100%. So there was no mention of that, which I thought was like, I would have mentioned that bit as well there, but hey. And just like the last one, he actually started very positive on hims and hers, saying financially they've been doing very well. You look at the financials, the growth is up, the free cash flow is up, the profitability is up, cracking balance sheet. Yeah, I mean, we've covered this all on the YouTube channel before, that financially in the last few years they've absolutely crushed it, and it's good to see the performance on the share price. So yeah, it was good to see him recognise how well they've done financially previously. And then after we've had a bit of a positive start, we get on to the reasons why Daniel actually thinks it's a void. So 5 months ago when I did this, there was the main concerns about marketing spend, the reviews on the platform, and insider selling. Now, marketing was still in there a little bit, reviews were still in there, but insider selling wasn't mentioned again this time round. Previously, Daniel said, oh, why are the insiders selling so many shares? And as you can see, there's still a few insiders selling shares. Why are insiders selling shares if they believe the stock is financially crushing it and will go higher? My retaliation is that a lot of these people have been inside here since it was a SPAC, and they probably want to release a bit of capital. Nothing wrong with that. And realistically, when you look at the important roles, like the CEO, for example, he's still not really selling any shares. And in fact, if anything, he still owns 9% of the business. And you can see here, once again, it's a proven point that insiders can sell for many reasons, but they only buy for one reason. And the reason why they buy is because they believe the stock's going to go up. And if you look at hims and hers, it was a prime example that insiders they were selling shares in the last 12 months. Didn't mean the stock was going to go down though. It's up over 106%. So it's just a prime example that insider trading doesn't always often mean anything. But the other two, like I said, were still there, which was on about marketing and reviews. So this time round, Daniel tried to phrase it more as a churn. And we don't know what the churn is inside the business, which is true. And that's something I'm always cautious of, is the churn side of it. And I'm always trying to measure it the best I can. Now, the best way that I can measure it, and a lot of it comes down to the marketing side of it, I guess, is that when we go on the recent quarter and we look at the revenue and we look at the marketing spend here, you can see as a percentage of revenue, that actually comes out as 50%. Okay, so when I went on a year ago to the last Q4 update, if you look here, the revenue was 167 million and the marketing was 85 million. So as a percentage of revenue now, that was 64%. So the percentage of revenue to marketing is actually coming down, which is really good to see. Now, to me, that says that, okay, they are still spending a lot on the marketing, but the marketing is getting people to stick on the platform longer. We've heard before that when they sign up, they get a payback in a year. The marketing is getting spent right now at the right time, 100%, to try and get those users. But the users sticking on as the platform. And a proof of that is that they're now scaling up to the profitability and revenue still growing at really good rates. And the percentages of marketing to revenue is coming down because people are staying on the platform. If the churn was high, the marketing would still be 64, whatever it was, 64% last year. And if they were losing, it would be 65, it would be going up. So the fact that the percentage of revenue to marketing is going down massively says that people that they're acquiring and the scale now of them getting larger is showing, and that as a percentage of revenue, it's good. So I agree the churn is something to be watching, but all the indicators when you look at the metrics inside the business, profitability metrics, spending marketing, is all showing that they're getting what they're spending on marketing, they are getting it in return and more by people sticking on the platform, as the financials are showing at the moment. So not sure on that one. The next one was the reviews. So Hims itself has 3.4 stars out of 5, which isn't too bad, which is average as you can see here. And I think that's fair enough, because when you look at companies, when do you ever leave reviews on businesses? It's when you've had a bad experience. So it's very hard to find a company that has very good reviews. The only time you ever see a company that has good reviews is probably they've gone, hey, go leave us a 5-star review and you can go get 50% off your next offer. And it can be manufactured sometimes, the reviews. At the same time as well, that companies can actually do hit pieces on other companies and try to get the reviews down, going, can we pay for so many negative reviews put on this business? It happens as well. When I actually look at the actual reviews, they actually look pretty good. 5 stars here, 5 stars here, 5 stars once again on all the recent reviews, 4 stars. The first time I actually 5 stars, the actual time when I get to a negative review here is about subscriptions being locked in. And I think the next one was a negative review on a subscription and saying, I ended up subscribing to it, and how did I end up subscribed to it? I wasn't happy about it. Like, to me, this is just people that can't read what they're actually buying without sounding too rude about it. Like, clearly these people have bought something and never realized it was actually something subscription based. Like, how did you not notice that? And even so, it's all about more like issues about subscription. It's not actually about the product. If it was a negative review on the product itself, then I'd be worried. But the fact that it's out about, I didn't realize I was subscribing to something, that's not that much of an issue. The issue is when they say your product's absolutely shocking. So I don't have any issues around the reviews, which was mentioned before. Now, there was a mention on 6 minutes 20 about the gross margins and saying the gross margins have improved massively, but I can't see the gross margins being maintained. Now, if you look at actual Hims and Hers' guidance recently, they've actually forecast a decline in gross margins. So even they've kind of given themselves room for protection. Now, they might actually hold around 83%, which would be absolutely magnificent. But even so, management themselves have kind of pre-warned the market already, going, yeah, they might come down a little bit. But what Daniel said is that he actually expects the gross margins to go down to maybe 40-50% as more competitors come in the space. And I've got to say, when you've got a business like Hims and Hers and doing these numbers, at some point there's got to be a competitor that does come into the space. If you are doing very well, the competition does come, and then that comes down to your moat. But I thought, that's in the next 5 years to fall down that much would be a major shock out of nowhere of a competitor. So I'm not sure on that. And he actually pointed to Amazon potentially being one of those competitors. Now, I don't know if any of you guys have been looking at Amazon, but they are starting to really start closing down a lot of their healthcare options. So when you look at Amazon, they've not seen much success in here. So it does show that it's quite hard to kind of break into this market, because you would say that one of those companies at Amazon, whenever Amazon comes into your area, you're like, oh no, Amazon normally do really well. And even they're kind of going, this is a hard area to crack. Look at TDoc. That's a really hard business to kind of crack. And just on the review side of it as well, I want to say, we talked about the reviews. Hims and Hers, 3.4 stars. Look at Amazon's. I would say Amazon's one of the best companies to order from. It's so easy for delivery. Delivery is always really fast. Returns, one of the easiest return systems out there. And then you look at Amazon's reviews and it's 1.5 stars overall. And if you look at all the other variants as well, they're all in the 1-star range. So it shows you, like, I would have no issues at buying Amazon at the right value, and this is why I don't take reviews into consideration, because the fact that Amazon's 1.5 stars is crazy, because I think their service is insane. Like, you order something, it comes the next day, and if you have any issues with it, they just kind of go, yep, return it, we've already refunded you, and you don't even return the product half the time. And they just basically, they just give you the label and go, yep, go take it to that shop, and that's all sorted. So yeah, that's also something else about the review side that I actually missed off the earlier point. Now, going on to the last bit, Daniel always runs a upside of what he could potentially see on a free cash flow point of view, or a DCF, which I always think is really good, interesting to see the potential upside. And I'm trying to just move this out of the way, but what I was really surprised by is that after all this and then running the numbers, he then saw his calculator and then he still kind of put it to one side as not being an investable business. And that really surprised me, because when I was looking at his DCF, for example, his upside here, it's a bit hard because the actual play button's exactly where the numbers are. But I think it was 19% here on the low side. So if your low side is like, oh, if you buy this, you'll make a little bit of money. I always like that. I always look at that for myself. The low side says I'm going to make, it's not negative. Like, that's not bad. And on the base case, over 100% upside. And on the high side, I think it's 200%, 265% on the high side, $47. Like, if your high side's showing that numbers, I personally think of those numbers, how can you see them upside in your figures and then go, yeah, I don't like this one. Like, I think there was a point of view where he went, oh, you know what, I might miss out on this opportunity, but I'd rather be 100% sure on the stock, and that's fair enough. You don't want to buy something that you're 80% on when you can easily find a lot of stocks that you're 99% on. So not an issue with that, but the calculator clearly says here, like, you'd say that at this point of view, you'd go, looking at the numbers though, I think if you were to buy this, you do really well. And I was looking at some of the numbers that were in here as well, and I thought that there were some pretty conservative numbers as well at these sort of levels. Implied earnings multiple of 12. That's relatively low multiple as well, which was quite surprising to see. So I thought, even if you look at these numbers here, I think it looks a clear, looks a really good opportunity. So yeah, overall, yeah, I don't want this to look at, once again, like a video that I'm out there gunning for someone. All I wanted to do is kind of go, hey, you talked about one of my stocks that I own, and as me as an investor, if I'm going to own this, I've got to be able to answer a view that is a bit more of a neutral view on it, and answer the questions, because if I can't, I've got to take that as a concern that I've got about the business now. But obviously, all the concerns that were in here, I can see, good positive answers for them. So, ultimately, I think they'll be okay. So yeah, hope you enjoyed this and seeing a bit of a counter argument to some of the positives, breaking the echo chamber of hims and hers anyway. So hope you enjoyed the alternative view to it anyway, and yeah, food for thought anyway. Hope you enjoyed it, guys. See you in a bit.